below and all the pink above. Withdrawal of liquidity of the bids below, adding of offers above. You can see that shows up as a very, very red, pinkish liquidity candle. And obviously the takeaway from that, whilst it wasn't the biggest profit, again, it gave an easy sell trade with an easy stop at break even very, very quickly. So that's what you're seeing. You can see when it sets up, you can see how it plays out. This is obviously how it played out here. You can see that the trade played out relatively nicely, made some pretty good money, you know, and it's rolled around a little bit in here, but it's okay. It's made some money, and it's eventually it scratched out at break even. I just put the break even stop in on the second attempt away from here simply because we weren't seeing them adding any new liquidity in here. They were still pulling away, but they weren't adding any new liquidity, and it was a case of saying that's not going to go any further. And it never went any further. It got jammed actually at 15s, and that's exactly where the price is at when we take this screenshot here at 15s. And as I said, the thing about this is very simple. Stops at break even. That's it. Stops at break even. You know, you're not looking at it from the point of view of it's going to do me $1,000 or it's going to do me $100. It's just stops at break even, and now we can take a read. You know, we can get a stops at break even, see how valuable the trade is, and then look to make that adjustment. So when you see the market below here is empty of blue, you know that the market's going to sell off a little bit further because nobody's adding any liquidity in. And that's what helps us to make that big decision, isn't it? That's what helps us to get into that play. Now, obviously, the value is bullish. To be fair, we've lost some of the value because it's been part of that hedge trade I've been talking about, buying the euro and selling the 2s, 5s, buying bonds. It was part of that hedge trade. So the bond long's done very well, and the long euro dollars kind of flattened out a little bit in here. So it's obviously causing that hedge trade to become stunted in this area. So that's okay. We understand it because we can obviously look to that chart and we'll see why it's done what it's done. And that's because the hedge was so big, everybody in the bank world took the hedge trade. They didn't take short euro dollars as an outright. They took short euro dollars and long bonds because that's the safe trade. That's the hedge trade that they can guarantee pretty much that they're going to have a lot of size on with not a lot of risk, and that equals a lot of cash.